U.S. inflation data will be out tomorrow as a major economic item on the calendar for investors, traders, and economists. But there's more to look out for in the current week as we turn now to Uchenna Minnis, who is a global market strategist and managing partner at Minnis Asset Management. Good evening, Uchenna. Great having you on the show. Welcome to the new week. What are the key issues for global market investors and traders as we start the new week, my friend?
I mean, you highly mentioned, Boston, that the US CPI data will be released tomorrow. That is just going to show investors and market participants what inflationary pressure is looking like, if it's aligning to the goals and policies of the Federal Reserve. We also, on Wednesday, will also be seeing CPI data from the UK as well. That's another key data in terms of the British pounds and really how investors will look at the economy of the UK and see how they are sort of faring inflationary wise. We also have retail sales for both economies, the US and the UK, which is also going to highlight the spending power of this of Americans and the Brits together alongside. So I mean, this data are they're marked significant when it comes to market data. And I think this, depending on how well they beat or maybe they miss, will determine how currencies and risky assets will react accordingly.
But what is the playbook right now for risky assets such as the US dollar?
I mean, what is happening across the board, US dollar risky asset alongside maybe the indices, the US indices are very risky asset, as I've mentioned earlier, is what we're seeing is a lot of cautious play. We could see a number of them trading what you call a range level, whereby they're just trading within a particular confinement and not necessarily highlighting or determining what pathway they are taking, if they are bearish or if they are bullish at the time. So what we're seeing is just some sort of consolidation, and I think what is happening and what that indicates with the market participants and investors is that they're really looking to see if there is any significant change in terms of policies or of market data in itself. So in that regards, I think what we're seeing is just a bit of cautious play across risky asset, Boston.
Okay, so we've got Russia looking to cut 500,000 barrels of oil per day, retaliation to EU's oil sanctions. How will this play out if Moscow actually go ahead to slash its output by that figure?
I mean, it's never a good thing to go head to head with the Russians. I mean, they've showed their should I say their capacity in terms of what they can do with tools in their disposal. I know we all experienced what happened in first quarter or beginning of second quarter 2020, how market really tanked significantly. But you see the sort of beautiful thing with this play with Russia, it's not that they are exactly trying to hurt themselves then hurt the market. What they're doing is they're trying to reduce their output. However, the focus is with their Asian market, whereby this country is already at $40 per barrel. What they are trying to do is increase the revenue by reducing that $40 to $20, however, selling less oil. So they're not planning to increase their oil output, or they're looking to reduce it, but they are also increasing their revenue by reducing the discount they're selling to their Asian market. And that's what we are seeing. The Russians, they understand this market. And if you see, Saudi Arabia has been very, very neutral when it comes to this invasion and with the war with Ukraine. It's because of the fact that when the Russians are being pushed to the war, they are going to respond, and they can really torpedo the energy market.
Where is China in this discourse, my friend?
I mean, China is regarded as a big spender when it comes to consuming energy, and since the beginning of this war, I think what had happened is Russia's holistically reduced their output to the Western region, the ones that are against the war, really. But China has always been, well, when it doesn't concern us, we don't necessarily put our concern in this. So what had happened is they have increased relationship. The bilateral relationship between China has gotten stronger, and Russia have gotten stronger over this period. And I think this is also a big win for them when it comes to their productivity.
So we spent the news out of 2020-21. Sir, was that Nigeria was a frontline when it comes to cryptocurrency, Bitcoin trading, and what have you. Now there's so much issue around physical Naira notes crunch. Is this having any impact on online trading sentiments by folks who perhaps they're getting a little bit more concerned about getting Naira rather than getting trading online and what have you? Uchenna, you still there? I guess we lost.
Yeah, I'm here.
Yes. Okay. Please go ahead. Yes.
Yeah. So
can I trade some Naira? Can I trade some Bitcoin cryptocurrency for Naira? Physical Naira? I need that. That's more you need right now.
I mean, I don't think the activities really has sort of been affected by the lack of cash, because online trading is always online trading, so the liquidity within the bank has not changed. What had happened with crypto trading is since there was a lot of policies against directly trading against this digital currency, there have been smarter ways and wiser ways to go about this within the community, and they found a way to ensure that they still continue to trade with this with the digital currency. But I don't see any effect of physical unavailability of physical cash affecting online trading activities also.
Are Nigerians really still binging on cryptos, on Bitcoin and the rest? Are they still doing that? Is the appetite even for trading the dollar, is it still very strong as we see this Naira notes issue, fuel scarcity, the elections concerns moving into February the 25th?
No, it's clear to everybody that what they thought Bitcoin was, as it was, it's not it. Everybody thought that this was the next thing since next best thing since sliced bread. But that's not the case. I mean, when they saw what happened in 2022, when Bitcoin lost a significant value trading downwards, and the reality is that when there is liquidity being slapped out of the system, Bitcoin goes south too. And I think retail investors and traders have seen that it is not what they consider as the upward for indefinite upward movement, like how retailers were making a lot of money between 2021 into 2022. But that has sort of changed now going into 2023. Everybody's now cautious, managing risk, and understanding that it's not just one way up.
Okay, so what's your outlook, broadly speaking, for the rest of the year? We're here now, just a year ago, with Russia, on the Ukraine invasion. What's your outlook for the rest of the year, considering where we are right now, with a whole lot of folks still thinking, say, look, oil prices could go up to 100, back again. Give me your outlook as a market strategist.
No, I mean, when it comes to the energy market, it's fairly stable. I remember the president of OPEC highlighting that the market is fairly stable. They are not even going to be, should I say, very knee-jerk reaction, even when Russia has announced to cut 500,000 out of their production. And that's because they've come to realize that when it comes to the energy market, you really cannot be too aggressive. You need to be data dependent, and that's what we're saying. So going into the year, I think what we'll be looking at is how demand is shaping up, how supply is shaping up, and that adjusting of policies from the OPEC bloc will now determine what the play would look like. For me, I think the market is fairly balanced. I think it has technically traded lower to correct itself. I think there is the pathway of least resistance is still upwards. I think oil is still in a bullish phase. I think the bullish phase would soon start to kick off. But generally speaking, I think the energy market is fairly stable, and it is some place that risky investors looking to get more yield on their trade, on their portfolio, can look to place their bets.
All right, you mentioned earlier, talk about sliced bread earlier. I like sliced bread, and we appreciate how you sliced the global markets for us tonight. Thank you so much, Uchenna Minnis, global market strategist and managing partner at Minnis Asset Management. Thank you, and enjoy the evening. Have a great week ahead.